The Bitcoin pre-halving rally phase. When and where will it end? We're going to be looking at previous historical cycles, 2020 in particular, but also 2016, comparing that to what's going on right now in this cycle, which has been quite a historic cycle already. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's talk about the pre-halving phase. When and where will it end? Well, we are almost, as you can see here, halfway through the pre-halving rally phase. 60 days before the halving is typically when this phase tends to occur, and you can see that just by measuring these boxes, they're exactly the same. 60 days before the halving is where these pre-halving rally tend to occur. So we're currently getting to the halfway point of this pre-halving rally phase, and we're really enjoying a fantastic one. History already has been quite accurate because we've been talking about this pre-halving rally phase for a while, and it broke out right on schedule, maybe even a few days ahead of schedule. So that was midweek. So rather than breaking out 60 days before the halving, we broke out maybe 65, 66 days before the halving. But generally right on schedule. We're now halfway through the halving phase, and now as a result we have to look at what has happened in the past, because if we look at 2020 and we have 45 days until the halving, roughly speaking, in 2020 we saw a pre-halving rally local top 2 weeks before the halving event, and then we saw a 20% pre-halving retrace, and that was the last pre-halving retrace, something we're also looking for later down the line in the coming weeks. But in 2020 we saw 2 weeks before the halving a 20% retrace. What about this pre-halving rally in 2016, right over here? 28 days before the halving event took place is where we saw a pre-halving rally top before experiencing a conservative 29% correction. And if you want to consider this downside wick, then that is a 40% correction right over here. So depending on how conservative you want to be, discarding extreme wicks, that's okay. If you want to exclude outliers from the analysis, that's fine. But 20%, 29% is the conservative, and 40% is something we still, sometimes we need to factor that in, that this is generally the range that 2016 saw a pre-halving retrace take place. So 28 days before the halving event. Right now we're approximately 45 days before the halving event. So what does this analysis give us? Well, 28 days to 14 days before the halving event gives us a danger zone of some sort. This is the historical danger zone where Bitcoin could potentially local top in its pre-halving rally phase before experiencing its pre-halving retrace. So you can see that this orange danger zone is still quite a way away. So currently, actually, this pre-halving danger zone is 28 days large, so to speak, and we're around the same amount away from this pre-halving danger zone, so 28 days away as well. So that still means we have a few more weeks left in this pre-halving rally, which makes sense because we're technically halfway through this pre-halving rally. Of course, the fact that we are halfway through this rally doesn't necessarily mean that we're going to just continue to moon, because we have seen fantastic price action already. But even in the pre-halving rally phase, you can see that a dip of 4% did happen, and dips generally can happen, as we've seen in 2020, these sort of downside wicks. Periods of reaccumulation, for instance, took place for a few weeks in 2020, but also in 2016 we saw some upside volatility, dipping in the downside wicks, but generally continuation. So the pre-halving rally, we're still firmly in it. We could still see upside, or maybe we see some consolidation, maybe a small dip, but whatever the case may be, we haven't yet topped out, because the topping out range could very well be 23 weeks, 20 days, 3 weeks before the halving event itself. That's the danger zone. We could go 14 days before the halving, and that's when the pre-halving retrace occurs. So in that case, we'd have even more time to enjoy. But if it's 28 days before the halving, like in 2018 or 2016 rather, then we have less time to enjoy this pre-halving rally phase. Which is it gonna be? Which is it gonna be? It's difficult to say, but it's better to just come up with a general zone for a potential pre-halving retrace that will be approximately 20%. Could it go to 30%? That would be a gift, really. But if you want to be even more conservative, 10%, 15% pre-halving rally, pre-halving retrace phase. Historically, these simply do tend to occur. So it's better not to ignore a possibility, even though it's very easy to get lost in this euphoria. This is fantastic, and we've been talking about a pre-halving rally phase, and we've seen this pre-halving rally break out. And it's not at all a bearish stance to talk about a potential last pre-halving retrace, because this has simply happened in the past before, 2020 and 2016, even 2012, as we talked about in previous videos. So it's not about being bearish. We just need to understand that being bullish also is about acknowledging these pullbacks before further upside, because notice how these pre-halving retraces have enabled fantastic price action towards the upside. Same in 2016. Yes, maybe in the midterm there was a bit of a pullback, but that generally enabled and added fuel to the parabolic rally that occurred afterwards. So it's not at all bearish to be talking about a pre-halving retrace. It's just normal price action. And even if we look at this cycle, we've been rallying from range to breakout rally to range, breakout rally, range, breakout rally, range, and breakout rally. Maybe we have to see some sort of 25% range develop at some point over here, and maybe that 25% range becomes this post-halving reaccumulation range, because historically we also see those develop as well. So really important to keep those things in mind. So how could, because we've already spoken about when could this pre-halving rally phase top out. So that's approximately 14 to 28 days before the halving. So that's the when part of the question. What about where? And this is where the pi cycle moving averages come into play. And this is something I spoke about in a recent video, so feel free to check that one out. But generally speaking, the gist of that video was that when we rally in a bull market, we tend to reject on the first time of asking from this green moving average. And this green moving average is the 350-day moving average multiplied by 2. And when we begin our bull markets, we reject on the first time of asking from this green moving average pi cycle resistance. Even in 2016 and 17, we saw 3 rejections from this green moving average in general, but then a shallow dip here, and then we broke beyond it. The main thing is that we tend to reject from this moving average, but over time, that second or consecutive rejection isn't as deep, and then we overextend beyond it. So could history repeat in the sense that we reject from here on the first time of asking, pull back a little bit, and then afterwards we revisit this moving average and then still reject from there, but maybe reject a little bit more of a shallow one and form a reaccumulation range before rallying a bit higher? Because rejections do occur on the first time of asking, maybe even a second and third, but I don't think we're in a cycle where we're going to see 3 consecutive rejections like this. If we're lucky, we get this one rejection, and one rejection is something reasonable to at least be prepared for, because later there will be very shallow dips and overextension beyond this moving average, generally speaking, something like this. So perhaps on the first time of asking, some sort of rejection. Maybe this is the rejection that plays into the pre-halving retrace. And then after that pre-halving retrace, we get back to this moving average, and then we form some sort of shallow dipping and reaccumulation range before overextending beyond it. So generally, we're talking about short-term fluctuations, but the main gist is that we're simply going to continue upwards over time. So whether we see a rejection sooner or later, generally it's going to be all in an effort to springboard Bitcoin to higher levels and new all-time highs over time. So where is this green moving average really? Well, the green moving average at the moment is around 66k, and we're currently around 61k at the time of this video, so we're just below this moving average. Still have a bit of a ways to go. So if we look at the previous chart where we are in the pre-halving rally from 61.5k to 66, well then that means that we still have scope for a bit of upside still left in this rally over the coming weeks, whether we move sideways for a bit and then break out, whether we break out right away and then move sideways, whatever the case may be, that still gives us a bit of scope for a bit more upside in this pre-halving rally phase before we enter this danger zone. So generally speaking, it comes down to a danger zone of 28 days before the halving to 14 days before the halving, and a danger zone of around 66k. So it does turn out that maybe we don't break to new all-time highs before the halving as a result, because we'd have to break beyond 69k to break to new all-time highs before the halving event. But if we have this green price cycle moving average rejecting price in the pre-halving period and then prompting that pre-halving retrace, then new all-time highs before the halving won't be a possibility. However, it would be a possibility if we see a overextension beyond this green moving average. It would still be a rejection from the green moving average, but not a picture perfect one. We could see overextension on this rejection. And we've seen overextensions on rejections even here in 2016, 2017. Slight overextensions, even in 2012, more of a slight overextension, but nonetheless a rejection. This was a clear deviation and then a picture perfect rejection here, even though we still saw some slight deviation beyond that green moving average. So if we are to break to new all-time highs in the pre-halving period, but still reject from this moving average, then I'd expect deviation beyond this moving average to get us to those new all-time highs before seeing a rejection take place. And if it's a shallow rejection, then maybe we get something like this, and we don't expect much of a pre-halving retrace, because this would just lead to another reaccumulation range forming before further highs, because as we've been talking about in previous videos, this cycle has been all about reaccumulation ranges. Just look at how these reaccumulation ranges always precede breakout rallies, and it'll be interesting to see if we develop another one just below the pi cycle moving average before breaking beyond there. But still, that pi cycle moving average could be the point of rejection. The question is, how much of a rejection is it going to be? If it's just a 20% retrace like we saw in 2020 into the pre-halving retrace, then that's fine. That would be a relative nice dip for dollar cost averaging. And then if we form a reaccumulation range below the green moving average and then go into the post-halving reaccumulation period, then it all makes sense. All these Bitcoin halving phases are accounted for in terms of this sort of scenario. So at the moment, we are still below the green pi cycle moving average. And in terms of the monthly time frame, we've only just monthly closed below this final major resistance. And at the moment, we are trying to retest this level as a support. But what if we turn this monthly candle into an upside wick as well and reject a bit lower? We still have to keep an eye on this monthly close here, because it would have been better if this monthly close occurred above this 61,300 monthly major resistance, the final major resistance before new all-time highs. It would have been much better to get a monthly close here and then a pullback into a retest before trend continuation, but we didn't quite get that, and Bitcoin is trying to skip that step, retest this level without that monthly close, and it's not as convincing price action on the monthly time frame as it could have been. So could this still end up as an upside wick? If we indeed reject from this green moving average, then maybe that will be the case, but we shouldn't expect too much of a dip from here. Maybe there's a shallower rejection from here. Notice how the last rejection took place and sent us into a bear market bottom and general macro downtrend. But generally, when we revisit new all-time highs or old all-time high regions, we sometimes get a rejection from there, but generally we dip in a shallow way to just showcase that this resistance is no longer a strong one, but a weak one that can be broken with time and a little bit of effort. So we are currently below the 66,000 green moving average, and that is approximately these upside wicks that we need to really clear. And actually, to be more concrete, it's this upside wick over here that we need to clear to really break into new all-time high regions. And it's that green moving average that is the gatekeeper at the moment. And these moving averages tend to be quite accurate in predicting rejections in a bull market, but these rejections can be also quite shallow. So something to look out for. We are still firmly in the pre-halving rally phase, but slowly we are approaching that danger zone for that last pre-halving retrace. We're still a few weeks away, so let's enjoy this pre-halving rally phase, but while still acknowledging that maybe we'll have to see a pullback in the future, and that pullback could be generated by that pi cycle moving average resistance. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this on Bitcoin going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.